Hey everyone, welcome back to Corporate Decoder, the place where we break down the confusing world of business with a smirk and a side eye. Now today we're looking at a company that's apparently making some big moves in the market. Let's see if it's a smart play or just a lot of noise. Alright, so what we have here is an 8K filing from Algorhythm Holdings Inc. This is basically a report company's file when something significant happens, something that investors need to know about right away. Think of it as an urgent announcement. The company Algorhythm Holdings Inc., based in Delaware, is looking to raise a pretty hefty sum of money, up to $20 million. They're doing this by selling shares of their common stock. The main deal here is a securities purchase agreement with someone called Streeterville Capital LLC. It's like a contract where Algorhythm agrees to sell its stock to Streeterville and Streeterville agrees to buy it. Now, this isn't just a one-time sale, it's described as one or more prepaid purchases. This means they can draw down the money over time. They're also giving Streeterville over 95,000 shares as a bonus for committing to this deal. Think of it as a commitment fee. So what's this money for? Well, of course, they say it is for working capital and other corporate purposes, which is pretty standard language. It means they need cash for day-to-day operations and whatever else the company decides to do. Let's look at the first chunk of this deal. They're talking about an initial prepaid purchase of about $4.4 million. But before they even get that money, they're already talking about discounts and expenses. This initial purchase has a discount of $36,000 and another $30,000 in transaction expenses. So the net amount they're getting is less than the headline figure, Anshan ad Klon figure. This agreement has a 2-year commitment period. This means Streeterville is on the hook for potential future purchases for 2 years, and Algorhythm can ask for more money as long as it's at least $25,000 at a time. And here's where it gets interesting. The total amount they can owe under all these prepaid purchases needs to stay under $3 million at one point. Algorhythm has promised to file paperwork so that these shares can be legally traded on the market. The government wants to make sure everyone knows what's going on when companies sell stock. Now, about how they determine the price for these future stock purchases, it's tied to the market price, but with a twist. They'll use 90% of the average price from the 10 days before they issue a notice, but there's a floor price, meaning it won't go below a certain amount. This gives Streeterville some protection. There's a big hurdle here. They need approval from their own shareholders to sell too many shares. The stock exchange, Nasdaq, has rules about how much stock a company can issue without telling its shareholders and getting their okay. If they don't get this approval within 75 days, they have to keep trying every 90 days until they get it. This is crucial. If they fail, they might not be able to get all the money they planned. What happens if Algorhythm wants to pay back some of this money early? Well, they have to pay back more than they borrowed. It's 110% of the amount they want to pay back early. So if they paid back $1 million, they actually pay 1.1 million. This is a penalty for early repayment. If things go really bad and an event of default happens, the whole amount owed becomes due immediately. And if the investor Streeterville decides to push it, the interest rate shoots up to 18%, or the maximum allowed by law, whichever is lower. That's a serious consequence for any company. To make sure they get their money back, Streeterville has a security agreement, which means they have a claim on all of Algorhythm's assets. This is like a mortgage on the entire company. The company also hired someone called a placement agent to help them find investors. They're paying this agent an 8% commission on the money raised, plus reimbursing them for legal fees. This is on top of everything else. These shares were sold in a private placement. This means they didn't have to register them with the government like they would in a public offering. They did this without any advertising or general solicitation. It's a bit like a private club for investors. We're talking about a lot of agreements here. The main deal, the prepaid purchase, the security agreement, and a guarantee from their subsidiaries. You can find all the nitty-gritty details in the exhibits attached to this report. Now, for a bit of a shake-up in leadership, Joseph Kling. A director has resigned from the board and all its key committees, the filing states. This wasn't due to any disagreements, which is the polite way of saying he's leaving without any drama. It's interesting to see that Semicap Holdings LLC and SMCB Solutions Private Limited are providing a guarantee for this deal. This signals that these subsidiaries are important to Algorhythm's overall operations and financial health. And finally, signing off on this report is Alex Andre, the Chief Financial Officer and General Counsel. It's always good to know who's putting their name on these important documents. So let's break this down. Algorhythm Holdings is essentially securing a line of credit, not through a traditional bank, but through a private investor. This means they can access funds as needed up to $20 million. The structure with prepaid purchases locked in by a security agreement on all assets is quite aggressive. It gives the investor significant leverage. The discount and penalty for early repayment are standard for these types of deals, but that 18% default interest rate is pretty steep. A major overhang is the need for stockholder approval to avoid exceeding share limits dictated by Nasdaq rules. If they can't get that approval, it significantly limits their ability to draw down funds, potentially jeopardizing their fundraising efforts. The resignation of a director is usually worth noting, though the statement claims no disagreements, which can sometimes be a diplomatic way of saying not everything was rosy. Looking at the overall picture, Algorhythm is clearly in a growth or turnaround phase needing significant capital. The terms suggest they're paying a premium for this capital and taking on substantial financial obligations and risks. It's a move that could fuel growth but also carries the risk of... Alright, that's our deep dive into Algorhythm Holdings' latest filing. What do you think about this funding strategy? Is it a smart move to get the cash they need, or are they taking on too much risk? Let us know in the comments below if you found this analysis helpful. Give us a thumbs up and definitely subscribe for more regular corporate breakdowns and hey, for even more exclusive insights and to get your questions answered firsthand. Join our Discord community. The link is in the description. Thanks for watching and we'll see you next time on Corporate Decoder.